Good morning, traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Wednesday, January 6th. Okay, guys, lots of stuff going on this morning. Of course, we've got the Georgia Senate elections. As I start the video here at 7:24 in the morning, it looks like the Democrats have confirmed one of those Senate seats, with the other one still being tabulated, but leaning significantly towards the Democrats' favor, with the Democrat holding a decent lead, but with still more votes to count, apparently. So, anyhow, the market has really reacted, and I don't know if it's exclusively to this Georgia Senate thing. It doesn't really matter why. You know how I feel about that. Don't ask a lot of questions why. Just look at price and see if you can figure out what's going on rather than why it's going on. I think if you get wrapped up in the whys, you can spend a long time trying to pull that thread out of a knotted ball of yarn, trying to, figure out all the specifics. And then by that time, the opportunity has passed and you're probably very frustrated. So SPY is flat, okay? Tech shares, QQQ, is under a lot of pressure, down, as I start the video, down about 1.3%, but was down as much as 2.3% when I first got up this morning, like a couple hours ago. So there's been a little bit of a rally off of those spike lows. But then IWM is pushing up towards 3% higher. So I view this as the beginning. It's really already started. It's not the beginning of a regime shift. I think that shift already started. I've been a little hesitant to, just absolutely pile in. But let's go through the charts and then we'll try to bookend this conversation with what we want to be looking for going forward. So here's SPY. I said that, pre-market pretty much unchanged. I think on the daily time frame, there's no changes from what we discussed yesterday, and that's key off of the 20 EMA at 367.50, 368. As long as it holds the 20 EMA, bulls are fine. I think you can stay long against the 20 and see if shares can push ahead. It doesn't seem to be the focus of the pre-market action. I mean, as far as the wild swings. So we're just going to have to see, how SPY settles out. But for now, even in the pre-market, it's holding the 20. And I think as long as it holds the 20, there's not a lot to do as far, if you've got holdings in the SPY. I think you stay long against the 20, but then gotta reevaluate on a break back below, because as we discussed yesterday, I think that will open the door for a test down at the 50, down here at 360, and possibly all the way back down to 355. You can see Monday was a deep rug pull, and this looks a lot like, it's a big flag, but still looks like that flagging formation. We'll have to see if there's follow through here. But right now, price is hovering right in this 370, 371 area. And as long as it can hold here on the 30-minute chart, as long as it can hold that zone right here, I think there's an opportunity to push higher up towards the top of this box and, recapture this move here. Because we've broken back above, we've recaptured 371, and we're right in that zone here. If we can hold there, the door stays open to 374. But if we fall below, then probably looking at a retest of Monday's lows down here if this turns out to be a big fib bounce and then a rejection. So I'll have to watch that. Different ball game on the Qs. Rates popped. The 10-year rate popped over 1% in pre-market trading. We spent all of 2020 chasing tech, back-to-back years where tech was the pure leader in the overall market. And I think that may be changing right now. Whether that's interest rate related or Democratic controlled government related with more regulation and oversight, things of that nature. I'm not sure, but we're set to open down in this 305, 306 area, and I think the same technical analysis holds. We've got the 20 EMA at roughly 308. I think 307.90. As long as the Qs remain below the 20, I think you got to lean bearish. If it can recapture the 20 and then make a move back up, then 20 is the 20 EMA is your pivot point on the daily chart. So as far as I'm concerned, if price remains below 308, I think it favors a move down to eventually tag the 50 down towards 300. We can see it better on the 2-hour and 30-minute charts. So here's the move on Monday, coupled with a bounce yesterday, and now we are, the pre-market's moving fast. So whether it opens at 305 or 307 really isn't of huge consequence. We'll have a big gap down. So there could be, as we always say, when there's a gap in the morning in the pre-market, they could flash the gap higher and close it and then come back down, or, just kind of get up here into this 308 area and then, have it roll over. But right now, I mean, the evidence is pointing to lower on the Qs, at least here in the short term. So here on the 2-hour chart, I think 308, just like it is on the daily chart, is your pivot. And then there's a little layer of support here at 303, but then, if that doesn't hold, then you're down into the 301s and the 300s. And then it'll be pretty obvious there's a decent-sized pullback underway. And then here, again, we just show the opening range. This 308 area as being a level that I would, in the morning, if price looks like it's going to break higher and try and fill this gap, I mean, that's a good sized gap, from 308 to 312, that's $4. That's a nice trade if you get that gap fill. So just be aware of that. That may be, that's a common technical move to, fill those gaps before they decide what to do. So be aware of that. I'm not going to be of much help here on IWM. It's up 3%. It's up in the 202 area for the open. So same thing here. Opening at new highs is bullish, right? If you break the high, you got to buy. Remember that. That being said, there'll be a large opening gap below. So any kind of pullback to close the gap down to yesterday's close at 196.50, that would be a great place to buy and get long IWM on a gap fill lower. So be aware of that. Like I said, we're going to be opening up here. So, opening at new highs. And this is, adding fuel to that reopening trade where we may see an extended period of time where the cyclicals, the value trade really starts to, capture the leadership of the market, and tech taking a back seat. Now, let's just take a little detour for a second. Remember, the market cap of these, small cap companies, they are not going to move SPY. What we may see here is leadership by IWM in the cyclical trade, with SPY treading water, not having a big impetus to go higher or lower, but then tech shares lower. So that's kind of what I see here short term, and we'll have to see, how long-lived that is. Facebook set to open down here below 266, and it really doesn't matter where it opens here. There's going to be a gap down. How big it is, it doesn't really matter. The key level to keep this chart constructive for the bulls is 266. You see the big range. We talked about it yesterday. From 280 to 266. That's $14. If price can't recapture 266, your target becomes 252. A $14 wide trading range. A break of that trading range below has a measured move of $14 to the downside. So 14 from 266 is 252. And so there may be a gap fill higher. And if price opens, say at 264 or whatever, and you see price recapture 266, I think you can get long there for a potential gap fill up to 271. But then going forward, 266 becomes your bigger picture bull bear pivot. If price can't hold 266 going forward, then you lean bearish and you look for a move to come down to 260 as a first target, and then potentially 252 for a measured move. Apple, I don't know where it is right now, but when I first started the video, trading in here around 128, and that puts it on the wrong side of this up channel. So that would be a technical sell signal from that perspective. And I think looking here, a move below 128 puts this 124 level into play. So that would be how I would be playing that. Above 128, it's got a chance to come up here and fill the gap. If it can recapture 131, that would be my buy area on Apple. Coming back up here, recapturing that, and then holding 131. If it can do that, I think the bulls are fine with the door open for 134. But it's my guess that they'll be, if there is a move to come up here and fill the gap, that they'll fade that and then bring it back down. So, we do have a downtrend intact here, and this is further accentuating that, especially if price cannot recapture this uptrend channel. Tesla's going to be fine. The EV space is going to, stands to benefit from, full control on the in government. And if that holds, I mean, Tesla's doing fine anyways. It's not reacting to, tech pressure. I looked pre-market and price was up in this 750 range. There was a big upgrade the other day from one of the trading firms talking about, I think it was 850 was their target. So that's lifting shares. And I think Tesla's, stands to benefit from positive vibes in the EV space. Microsoft, I've penciled in this structure just for your benefit. We've got price opening down here, set to open down here around 214, 215 in this area. But, sharp sell-off, bear flag consolidation, and then move lower. That's that A, B, C move that you can often see in the charts. So if, price, once the market opens, there's going to be that big gap above. And, if you can, capture that move up to, 217.50, 218, that would be great. But then look for a rejection there and then back down towards the bottom of the trading range. And I think you can see it here. There's a gap between 209 and 205.50 that was never filled from way back when. So 209 becomes a very important level on the downside for that to hold at gap support. Much of the same ideas with Amazon. We had this ramp and then rug pull over the past several days. Now we've got a well-defined bear flag structure here. And when I looked in the pre-market, price was right around 31.50. So to me, this morning, this 31.50 will be your important pivot. If price loses 31.50, then the door is open towards 3,100, 30.50, and even down towards 3,000 if things get going to the downside. So I would key off of 31.50 this morning if you're an active Amazon trader. That's going to be a key level to hold. Google. Let me move this up here a little bit. Was bouncing around 1,700 this morning in the pre-market. There's a $50 gap below 1,700. So that becomes a key level. If you remember back when there was an earnings announcement that gapped Google's price higher. This is the earnings gap that never got filled down to, I think it's 1650, 1645, I think is the bottom of the gap. You'll have to look at the daily chart to get that figure. I don't have it here, but I do know it's right around $50. So that would be a nice short if they run price up to close this opening gap and then you see it, start rolling over. I think that might be an attractive short, or wait for it to crack 1,700 and then get short for a $50 move. Netflix has dropped out of this channel in the pre-market, trading down around 507, 508, 510. Again, same idea. There's going to be a gap above. They may run it up, close that gap, back test this channel, and then come down. If they recapture the channel, bulls saved it. Simple as that. But if they drop down, back down below, then all those levels that we had on the way up, 505, 494, 477, those all become important support levels on the downside if price can't hold, and then then we're on a trend change lower. All right, here's where we get to the crux of it. TLT, very important chart, and it may be a trade that you want to put on your radar because it's on my radar. You'll remember back here, I tried a short on TLT. I thought we were going to break it. They saved it. It might have been right here, actually, beginning of December. Price has continued to work its way down, which corresponds to a rising 10-year yield rate. And now, in the pre-market, price is clinging to 154. And roughly speaking, that corresponds to a 10-year yield of 1%. So, the thing to look at here is look at all the air. Look at all this trading that's happened, since the March gyrations. We have been working between this 171 and 154 the whole time. Big descending triangle. If yield starts running, taking out 1% and convicting with conviction, the height of the triangle, which is $15, $16, $17, becomes your downside measured move. So, a break of this triangle, break of 154 into this big air gap here, brings you down towards the 140s on TLT. And that's going to be a monster trade if that happens. I want you to be ready for that. Because once this dam breaks at 154, it may be real tough to save with all this pressure coming down and yields finally breaking out above that 1%. Be ready for that. Be ready for a TLT short against 154 going forward. And if you put that trade on, well, I'm not going to tell you how to do it because it all depends on your trading style. I was going to say go out and time a little bit and not try to game every little wiggle because it's tough to do. I think this would be more of a trend trade versus when you're inside the triangle, you can say, okay, well, I'm going to be long against 154. Then I'm going to get short against the downtrend resistance, blah, 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 back and forth as it grinds within the structure. But once it breaks below, there's no structure there. You've got essentially a massive air pocket. So I think you can hold your ground on a longer time frame basis and say, I'm going to stay short against 154. I'm going to buy myself some time, with a stop just above. And I'm going to go out, I'm going to look out to the end of February or to March expiration. Or I'm going to keep rolling, 3 weeks, as soon as you just kind of keep rolling a trade if you're a short-term trader and just keep rolling out and buying more time. But if you're more of a swing trader, I think this is going to be a duration trade where you can look out, 8 to 10 weeks and look for that move down towards 140. Let's talk about the other spaces that stand to benefit and that are working pre-market. Pot stocks. I'm sitting in January 16s. January 16 calls on MJ, and pre-market, it was up here in the 1650s. So I may be bailed out of that position. What I want you to do, and I don't have the chart handy, but if you're not in pot, I want you to take a close look. And I'm going to do this after I finish the video. But I really like the ETF with the ticker symbol MSOS, and the ETF YOLO, YOLO. Both of those focus on U.S. operators, where MJ is mostly Canadian operators, because if the Democrats do in fact take control, you're probably going to see a push towards national legalization. And then what that's going to do is set the multi-state, U.S. multi-state operators on fire, because, they'll have free reign and they won't have all those banking constraints that are holding them back right now. So there may be more consolidation and stuff like that. And then, the dominoes fall on a state-by-state basis. And you'll remember that in the November elections, all 5 states that had marijuana on the ballot passed their initiatives. So I think the ball is rolling downhill now for marijuana in terms of, overcoming all those legal hurdles. And this whole thing may be just getting started. So I think pot stands to be a beneficiary. Now, let's go through the other sectors. You're probably going to see a moonshot in solar. It's already been running. We've had a couple trades. Really haven't stuck with it that well. But there's going to be more opportunity in solar. You're going to see a moonshot in EV, batteries, all the resource materials. The rising interest rate environment, we've already seen it. Commodities. It doesn't matter if it's corn, wheat, soybeans, coffee, copper, silver, gold, Bitcoin, all this, inflation hedge type stuff. Your Freeport McMorans, your Southern Coppers, your aluminum stocks, steel stocks, all that reflation trade, I think is going to go off to the races now, and we got to pick our spots and get on board, because I don't think we've particularly, quote, missed everything. I'm not going to sit on the sidelines and say what I should have done 2 weeks ago. I'm going to, try and get a spot that's objective and get long some of these sectors. And one I forgot is financials. If interest rates are rising, that's beneficial to the banks. So I think JP Morgan, I saw, was up about 3% in the pre-market. So this may be, a bonanza for the cyclical value reflation type trades. So reorient yourself, and if you've been leaning on tech for the past 2 years, you've been right, but don't stick your head in the sand. If you've got, if you're still loaded to the gills in, software and all these high flyers, you may see a significant pullback there, and don't stick your head in the sand. Make sure you adhere to your stops, and then recognize the rotation that is afoot, and then reorient yourself to those other sectors that you may not have been trading or even familiar with over the last couple years, because I think things are changing. Let's wrap it up there. I hope you found the information helpful. I think we're at an inflection point. as we discussed, I think there's going to be a ton of opportunities. And don't think that you missed the trade, because you haven't. It's just getting started. If you're new to the channel, please subscribe. I'd love to have you on board. If you hit that alarm bell, you'll get notified of all the new content. Over in the show notes are links to the blog site, where you'll find a lot of interesting and helpful articles for aspiring traders at all levels, along with a link to where you can register for my content and get a nice, tidy email each and every time I publish, so you won't miss a thing. Also, I want to make you aware, if you don't know already, we have a dynamic and growing trading room that I'd love for you to join. Got a lot of nice traders in there. We're really picking up some momentum. Everybody's real open with their trades, offering ideas. It's a real safe place. There's not a lot of judgment there. So it's all aspiring traders working together to try and lick this market. And I think you can never have too many trading buddies. And I think if you were to explore that, you would be pleasantly surprised. So register for my content and I'll send you an invite link. I'd love to do that. So let's wrap it up there. A little longer segment this morning, but a lot going on. And I look forward to following that up later today with some trading opportunities. So this has been Chris Buss with Traders Profit Compass. Have a good trading day and talk to you next time.